Hello traders at CMC Markets. Welcome to another update. This one is dated the 10th of January and my name is Trevor Neil. I'm a research analyst at RRG Research BV. Today we're going to look at four indices, the DAX, the S&P, the Nasdaq and the Dow, and look at the charts of those, but we're going to start, as we always do, by looking at them on the relative rotation graphs. In the middle here we have the MSCI World, so we have only the Dow in the leading quadrant and pointing in a northeasterly direction. That's a strong, getting stronger picture. We have the S&P, which has crept from the lagging quadrant into the improving quadrant, although it's yet clear that it's going to move into the leading quadrant. We've got the Nasdaq, which has moved from the weakening and with a quite a long tail here. We saw this before, how that is it's falling away on a relative basis, and it's heading westerly as well, so getting weaker on a relative basis, not the index itself, but on a relative basis compared to the group. And then we've got the DAX, which has been very weak, but look at this tail here, very long, so it's swiftly moving up through the lagging quadrant and heading towards the improving quadrant quite speedily, and that's quite an interesting thing to happen. Of course, it's a long way away from the leading quadrant, but it's moving quickly in the right direction from the bottom of the pack to maybe not the bottom of the pack. So let's look at these one by one, and we will go left to, so from the DAX through to the Dow. Now this is an hourly chart of the DAX. You can see that since the 5th of January we've been generally moving up, impulse, reaction, and starting to move up again. See this shape in the MACD here, so it crossed over here beautifully on the 5th at the low, came back, looked as though the move was over, but now it's gone positive again and the gap is widening. It's moving towards resistance, which is at 16,750. It's supported here at 16,617, and the next resistance above, which is quite a way above, is at 16,970. So if it breaks through this 16,700, and bear in mind what we were seeing in the RRG chart, where it was moving so strongly up through the lagging quadrant and improving quite dramatically. If we break that, and it is an if, then we're continuing the zigzagging pattern and it comes towards resistance there. You would have protection at this low here at 16,600. So there's an opportunity potentially here, but the key thing is we've got to show that the uptrend is continuing. The RSI is a little bit, and so I would be very keen to wait to make sure that high is broken before you commit. But at this moment the RSI is around 60 and currently pointing down. So not great yet, but potentially could be, as long as it holds this low in here. Next, the Nasdaq. The Nasdaq and the S&P were about level in the JDK-RS ratio, but moving in the opposite directions. Here we had this poor reading for it, and we can see here that it's struggling a little bit around the 16,710 level. We've got important resistance here from the 28th of December, and that's at 16,900, where it failed to get to the 17,000 level. We have got support at 16,500 and major support down here at 16,250. The MACD is positive, yes it is positive, but you see the gap is narrowing here. That's a sign of loss of momentum. On the RSI we see the same. We've gone up and then it's now, yes, it's relatively strong because we are going up, but it's lost momentum. This seems to have lost its power, and that's what we see in the RRG chart. It's not at this moment that attractive. It looks as though that what's going on here now is likely to continue stalled action. Now to the S&P, which you remember was in the same place as the Nasdaq in terms of the RS ratio, but a better trajectory in in the movement within the RRG. We've had a stronger move up here. It's a very similar chart, isn't it, actually, with the high here at 4,790, two tops in place here at 4,764, 65, then close support at 4,730, and then major support down here at 4,680. We've got positive reading in the MACD, narrowing in, reflecting this stalling behavior here, and then on the RSI, strong higher lows still intact here, but a little bit of it's not a bearish divergence because these two highs are the same, but we've got a lower high in here. So stalling is the message. But we're pretty close to the breakup point here, 4,765, and the resistance at 4,792 is actually light. It's well supported here at 4,740, so there could be, this is your risk zone here, breakout to participate, and then here below to protect yourself, because a break of that level would indicate a move back down to the 4,680 level. But this one looks better than the Nasdaq, and we are closer to the breakout point here. So there is a potential opportunity in the S&P, but again, crucially, we need to break those two highs and break that top in there at 4,706 to confirm that the uptrend is resuming, and an attack on the weak top is going to take place. Now to the Dow Jones hourly chart here, and you'll remember in the RRG, daily IRG that we were looking at, it was moving quite northerly, the only one that was in the leading quadrant, and with a slightly easterly direction. It's had a great run, hasn't it? It had this terrific uptrend line back from October, the end of October, and several points on it. It's a real classic. But the thing to note about that uptrend line is that when we got ahead of ourselves at these points here, when the excursion away from the line took place, it wasn't excessive. And so it's no surprise that once the line is broken, that the sell-off has been rather muted. The highest price paid as the uptrend line breaks is more or less where we are now. And so there are not people not taking losses, actually only profits, because everybody who's bought has bought lower than this price here. If we had gone up to here and broken down, then people would have paid these high prices here, and there would have been a lot heavier liquidation. So this is a real classic. In fact, it's going to go into my album of chart patterns, looking at behavior when trend lines break, estimating the response to that. But given the orderly advance, it's no surprise that this correction is mute. The MACD has gone down here now and is ahead of us, setting up for a reversal upwards. Let me zoom in a little bit into this. Now you can see that we're trading around and consolidating, I would say. We've seemed to have lost downside momentum. It's still showing here, but on the RSI we've started to move up, and we're back above 50 again here. This is well above the support that it could have come back to, which is at 37,043. It does look as though it's lost momentum on the downside. It's completed its count, so the excursion amount and the break to the excursion amount, which is small. The background trend is very strongly up in this one, much stronger than the other ones, and we're very close to the highs in this one. But this stochastic has actually had little bullish divergence in here. This does look as though it's completed the pullback. The pullback is very mild, and that indicates that the bears are weak and the bulls are still strong, and it looks likely that this is about to resume its move and go back in the direction of the longer term trend. As seen on the RRG chart, this is the best looking of those four, and this and perhaps the DAX, for different reasons, are the two opportunities I would concentrate on. I thank you very much indeed, everybody, for your time. This is Trevor Neil of RRG Research, thanking you very much, and may the trend be with you. Goodbye.